So you're looking to buy a house, but you need to come up with the money for down payment. How in the world are you going to come up with all this money? That's what we're going to talk about in today's video. My name is Dustin, this is Simple Dollar. If you're new to the channel, we make videos on everything from personal finance to investing, essentially anything related to your money, so consider subscribing if you haven't already. Also, check out the description below. We put links to everything we're going to talk about today down there, so make sure you check that out, or you can head directly over to thesimpledollar.com. Check out a lot more valuable content over there as well. So regardless of how much you're needing to save, saving for a down payment is a major lifetime goal and achievement. And whether you're talking about 20% down or you're talking about something like 3 to 5% down, it's going to be a big number, a big amount that you're saving for. Fortunately or unfortunately, depending on what side of the fence you're on, home prices pretty much around the country have really been rising in recent years. One reason is due to lowering interest rates. So you think about it, as interest rates go lower, buyers are able to afford more house. Because the cost to borrow money isn't quite as high, they can borrow more money and still have the same monthly payment. What does that mean for down payments? That means down payments on the same percentage have gone higher because you're buying more house. So it can be difficult to save for a down payment, but it's definitely not impossible. Let's go ahead and talk about 5 ways to help you get there. Step number 1 is open up a savings account. So you want to have a savings account that's specifically designated for your down payment monies. You don't want to commingle with your regular monthly expenses. 2 reasons why we don't want to do this. The first one is if all your money is grouped together in the same account, it's going to be really easy to dip into that money. If you just have a number in your mind that's part of your checking account that you're keeping track of mentally, it's going to be really easy whenever you have something that you want to purchase just to dip into those funds every once in a while. By setting aside that money in a separate savings account, it's going to be a lot more difficult to get to it. That means you're going to have to actively go to that account and transfer into another account in order to use that money. Going to be far less likely to touch it. We'll leave a link in the description to some of our favorite savings accounts down below. The other thing is, in a traditional checking or savings account, you're earning basically no interest on those types of accounts. You compare that with an online high yield savings account, you're getting a little bit of something. Now, it's not going to be great. It's probably going to be less than 1% right now, but at least you're getting something. So now step number 2, you need to have a budget. If you're not tracking your expenses, you really have no idea where your money's going month to month. So I've been budgeting for, I don't know, at least probably 10 years now. And every single month, I seem to find one category that I'm surprised at how much I've spent in that specific category. I try to spend maybe $200 a month on eating out. And if I'm not watching it closely, I'll be surprised to see that I've spent $300-400 just eating out in a single month. It's really about being intentional about where your money is going. I don't want to be spending $400 a month eating out. It's just not worth it that much. But by budgeting, you can be intentional with where your money is going, track your expenses, and then put more towards a down payment. You'll find unnecessary expenses that you didn't realize you have. You can cut those out, and that just adds more fuel to the fire of building your budget. Step number 3 is check your interest rate. So this goes on both sides of the equation. For one, our money in our account, like we talked about a little bit ago. So your savings account, if you're in a traditional checking or savings account, you're probably getting next to 0% on your interest. You compare that with a high yield savings account, and you can get a little bit of something. Now, it's not going to be great, but at least it's working with you. On the other side of the equation, if you have any high interest rate debt, so things like credit cards, possibly auto loans, where you're paying a lot of interest on those, it's like running a race uphill. It's really going to be a detriment to your long-term success, but also going to make it more difficult to save for a down payment on a house. If you do have high interest rate credit card debt, consider trying to knock that out before going for the down payment. If you recently bought an expensive new car that has a high interest rate on it, it may be worthwhile considering if you might want to sell it and buy something a little bit cheaper. The excess money that you're not spending can be added to your savings for your down payment. Step number 4 is going to be check your credit. Now, I'm not sure where you are in the home buying process right now, but now is the time to check your credit. The earlier you check your credit, the more time you have to correct any issues. It said that there's like 20% of active credit reports that have some error on it according to the FTC. And we'll leave a link in the description below showing just how important your credit score is to a mortgage payment. Having good credit is not only going to save you money on your mortgage, but it also is going to make the process a whole lot easier. The sooner you find and get any issues corrected, whether they're legitimate or not, the more time you're going to have to build up your credit before you have to buy the house. And step number 5 is going to be use any windfalls to your advantage. So whether this is a tax return, you get a bonus at work, or maybe grandma sends you some birthday money. Whatever it is, I know it can be very tempting to go out and splurge a little bit of that money, treat yourself to something nice. Try to resist that temptation if you can, and focus on what your actual goal is. Do you really want the new pair of shoes, or do you want to buy the house a little bit sooner? Another thing to check out is programs that allow people to buy homes a little bit easier. Now, a lot of these are geared towards first-time home buyers, but some of them are geared to anybody that's buying a home. And around the country, there's about 2,300 different programs that either cut your interest cost or cut some expense, or maybe are just pure grants that you can get. It's free money that you don't have to pay back. So do a little homework, a little bit of research, and see if you qualify for anything like this. It can help make your down payment a little bit easier, a little bit more achievable. That's going to be it for today's video. Hope you enjoyed it. If you did, I'd really appreciate it if you drop down, hit the like button. Remember, you get more content over at thesimpledollar.com. And for The Simple Dollar, my name is Dustin. I'll see you again soon.